After a couple of tumultuous months of mortgage rates, housing demand levels, and total sales jumping up and down, Irvine's housing market finally saw 2 months in a row of somewhat consistent data. And although consistent, the data still leaves a lot of questions on which direction Irvine's housing market is headed. Starting with total sales, which stayed nearly level with June's reading, increasing by a single closing to 62 detached single-family homes sold in the month of July. This consistency in sales comes thanks to a more balanced financial market and overall steadier mortgage rates. After a very turbulent start of the year, where we even saw the S&P 500 drop 10% in value within a couple of days, the market has been much more steady and overall positive. Since that dip in April, the majority of markets have made back those losses, many of which have even continued climbing to new historic highs. This balance in the overall economy has instilled much more confidence in today's buyer in the real estate market as well, and is what has led to a more balanced number of total sales these past couple of months. Mortgage rates have also remained pretty steady over the past couple of months, albeit they have been steadily high. The 30-year fixed rate started the month of July at 6.67%, and a month later entered August at 6.63%. These overall higher mortgage rates continue to impact housing demand levels, as demand, which is measured by the number of pending sales, also stayed nearly unchanged, dropping just by 2 pending sales in the month of July. When looking at supply levels, they also remained relatively balanced and even slightly decreased, which is a little rare for this time of the year. Historically, we see supply levels peak around August or September before declining during the back half of the year. This year's early decline in supply does not stem from more homes selling or higher levels of buyer demand, as proven by those previous stats. It comes from more sellers deciding to pull their homes off the market after not finding their wanted success. In the month of July, we saw 90 detached single-family homes leave the market in Irvine as sellers decided to put a pause on their selling process. Despite a much more balanced month, the average price per square foot of a detached single-family home in Irvine decreased for the 4th month in a row and now sits at $932 per square foot. And this shouldn't come as too big of a surprise, as those demand levels continue to struggle, and they are especially low at that luxury price point, which is a big driver of this average price per square foot number. However, as I record this video, it looks like all of these trends could get shaken up as early as next month. Off the heels of a much weaker than expected US jobs report, the 10-year Treasury fell to 4.24% on August 1st and continued to slowly decrease into Monday of this week. This has had an immediate impact on mortgage rates, as the 30-year fixed rate dropped from 6.75% to 6.57% during that same period. That, combined with speculation that the Fed is finally going to lower the federal funds rate at their September meeting, could lead to a meaningful shift. If rates continue to fall, we will likely see Irvine's housing market get a second wind in the back half of this year. So let me know in the comments below, do you think we will see an abnormally busy back half of the year, or will the housing market continue its slower pace throughout 2025? If I don't hear from you, well then I look forward to getting to bring you the next market update. Cheers.